Mr. Rajneesh Karnatak is ready, Managing Director and CEO with Bank of India. And for the quarter gone by, the Bank of India numbers have been quite a delight, considering that some banks are having problems in MFIs, some banks are having problems in the unsecured category. All banks are struggling to get their liabilities engine going, and at a time when economy in general has slowed down, POI numbers have been quite okay. Morning, thank you for joining us. These are good numbers. You want to start the interview with a smile. Can you maintain this momentum when economy is slowing down?
Yeah, overall numbers, if you see our bottom lines, whether it is our net interest margins and our operating profit and net profit, the way we have grown this time, 23% in the operating profit on the YOY side and the net profit 35%, we are very confident the kind of business model that we have now, that we will have something better in the Q4 also.
Can you broadly tell me that historical advances, which are a function of India's GDP growth, now that economy is slowing down, will your credit growth and advances, will that also slow down, or you will continue to maintain that momentum of 14 to 15% growth irrespective of the economy?
Yeah, so 15% is the YOY growth of the advances which we have shown as of December. But now that the base is rising for Bank of India, for this year we are giving a guidance FY25 that our credit growth will be somewhere around 14 to 15%. But for the financial year 26, definitely it will moderate and it should be at around 14% for FY26.
Karnatak, when it comes to your retail book, vehicle loans and personal loans, they managed to grow higher. Although it is a small portion of your total book right now, tell me, are you witnessing any sort of asset quality stress when it comes to these two segments in particular?
Drop ho gaya. I think there is some issue.
Okay, the honor number seems to have dropped. We'll just get back to Mr. Karnatak in just a second from now. You know, the one stock that you can't take your eyes off from, it's Keynes. Look at the kind of massive sell-off that you're seeing on the stock. Bank of India, of course, has got a thumbs up from the markets, 18.25%. And you know, Nikunj, that explains what we've seen in some of the large caps as well. When the positioning in the stock is so concentrated, the stock is so overbloated, even a slight bit of miss leads to this kind of a fall.
Shares at 2022 Keynes was at 600 rupees. I think it just went public in and around that price. Went to about 8,000. It became like 10x from its listing. You could ask yourself that what was the P multiple of Keynes? The P multiple of Keynes, I think FY27 was 80 times. 80 times for a business which will grow, but for a business which will struggle to get margins that of FMCG company. Now here is a basic manufacturing company which will grow because EMS will grow, but they don't have the highest return on equity and highest return on capital. We started giving them P multiples which were north of FMCG companies and north of what perhaps IT companies are commanding, because they have the highest return on equity and highest return averages. So that's what markets are, Aisha. Something new gets discovered, markets realize it, the company grows, there is acknowledgement, then there is recognition, then there is participation, then there is FOMO, and then there is desperation. And then there is a market cap which gets created. So Keynes, Dixon, these are powerful themes, these are multi-year themes. It's just that you're pricing in a growth for eternity without realizing polycap. So these are things which happen in the market. I always say that in market, it's like a pendulum, swings. And it's only age that goes one way. But it is the pendulum which swings in terms of the market sentiment. At 600, I think it fell below its issue price, if I'm jogging my memory, in 2000. Keynes. Keynes came below its offer price when it went public. Just check, I think it went just before Diwali. I'm jogging my memory at 2022 Diwali. Yeah, just check it. I think it just went public at that time.
We'll just dig out that data. I think Mr. Karnatak as well is back with us. Mr. Karnatak, can you hear us now?
Yeah, I can hear you. Yeah, thank you.
I just wanted to get a sense on how the vehicle loan book as well as the personal loan segment is performing for you, and whether you're seeing any stress of a slowdown in the economy.
Yeah, so as far as our personal loan book is concerned, it is growing at around 42% if you see our numbers. However, this 42% is at the backdrop of a low base. which was around 8,300 crores as on December 23. So this that is why the YOY growth is at around 42%. The 12,000 around crore book is only less than 2% of our global loan book. So the overall size is quite low, 2% of the global loan book. Apart from that, if I give you the stress NPA within that, the NPA is also within 1% of the total personal loan book. So it is all well manageable number. And if I give you further color on the personal loan book, 65% of our personal loan book is to the salaried class, where the salary is coming into the Bank of India saving account, and the remaining is to the self-employed. As regarding vehicle loans, the growth has been good, more than 20% growth has been there. That is at the backdrop of lot of channel financing and other kinds of things and dealer tie-ups that we have done over the last 12 months. That is now yielding results, and good numbers are there, and stress also is not much over there in that book. Considering the overall growth scenario which is there, we expect that the credit growth should be at around 14% in FY26.
What is your exposure to the unsecured loan? What is your exposure to MFI? Can you clarify on those two numbers, please?
So as regards unsecured personal loan is concerned, as I said, that it is around 12,000 crore.
Of the book,
so
sir. I'm
that
trying to
is
understand the percentage
less
of the
than
book.
2% of the global loan book. As regards MFI is concerned, percentage terms it is 2%, less than 2% of the global loan book, personal loan book.
And what is the number for MFI? Is that also less than 2% of the total loan book?
Percent of the global.
Yeah, there is a bit of...
It is somewhere around 0.5%.
Okay. Would you be consciously growing your MFI as well as your unsecured loan book? Because, you know, less than 5%, you're in a comfortable place. Because nobody wants to grow that unsecured and MFI book. Is there an opportunity which BOI can see that start lending there? Why? Because the problem has bottomed out.
No, this is a organic growth which is going on, the growth which we are seeing, and the incremental growth which you see is also because of the low base which is there. So otherwise we have put all guardrails both for MFI and for personal loan to take care of the credit quality, and we will grow in a very organic manner.
Could you broadly tell us that in your corporate loan book, what is the sense you are getting? I mean, are you getting inquiries for both term loan and working capital loan, or it is still working capital loan, largely term loans are not picking up?
See, as regards corporate is concerned, there is lot of competition for AAA and AA rated corporates, because that investment is less over there. So definitely there is competition among the banks over there, and predominantly whatever the kind of inquiries which are coming are more towards the increase in working capital rather than more for term loans. So that is the sense which is there. However, as far as Bank of India is concerned, we have grown our corporate loan book by more than 10% on a YOY basis. And if I give you the sense on the pipeline, also credit pipeline that we have, as on 31st December, we have nearly 60,000 crore of credit pipeline in the global corporate loan book, which includes both term loans and working capital.
With your current capital requirement, and if your advances are growing at 14-15%, CASA is coming at a much lower rate, there could be a gap. And I'm simplifying it for our viewers that if a bank is growing at a rate which is higher in terms of advances, and if the liabilities is lower, that means you will need capital. How far are you away from raising fresh capital so that you can maintain this 14 to 16% advance growth?
Yeah, so there are two parts to it. First part on the CRAR side. So our CRAR is now at present at 16% as on 31st December, as against the RBI mandated 11.5%. Here our credit ratio, risk weighted ratio is around 46%. If we have continue to grow it with a risk weightage of around 46%, we can do an incremental credit of more than 3.5 lakh crores. And if the risk weightage is around 100%, then we still can grow at an amount of around 1.75 lakh crores. That is as far as the cushion, as far as the capital is concerned. Otherwise, if you see, we are making profit. We have already made a 9-month profit of 6,500 crores. We have given a guidance of more than 8,000 crore of net profit. And in the coming quarter, in this quarter, we'll be raising 2,500 crores of AT1 bonds and also 5,000 crore of infra bonds. That will also go towards increasing our resources for funding the credit growth. As regards overall deposit growth is concerned vis-a-vis the credit growth, if you see our numbers, within the domestic deposit side, we have grown by more than 5,000 crore over our deposit, over our advances growth in the domestic side. So we are very much concerned about the credit deposit growth which is there, and the resources should be coming from the deposit growth side. However, we have raised 18,000 crore over and above the deposits, which is through our borrowing against the excess SLR that we had, refinance also, and then the infra bonds that we raised in Q3 quarter of 5,000 crore and another 2,500 crores of tier 2 bonds that we raised in the Q3. So there are a lot of resources available to us to meet the credit growth whichever is there for the financial year 26.
With this, Mr. Karnatak, we'll let you go on that. Thank you so much for taking the time out and speaking with us on your earnings. So that was the management of Bank of India. But
if you like this video, then like, share and subscribe to ET Now.